Welcome, ladies and gentlemen. This is Better Trades coach Robert Roy. Welcome to the market recap. This update is for Monday, November 10th, 2014. As we go ahead and get started here, guys, let's first go ahead and take care of our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion, paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Okay, so let's go ahead and jump right in, folks. Today I want to look at the S&P as we always do to get started off with our recap. And something phenomenal happened with the S&P on Friday. It broke out to an all-time high once again. So it wasn't a great move. We did come back and retest that 2024 level on the S&P, right? And in the market insights, we talked about our downside targets of the 2024 and 2011 are our downside targets. And I know that's nice, but you're definitely looking at where we're moving up. So we're looking at about that 2052 level. We have a Fibit in there. If you're not familiar with Fibits, it is a Fibonacci indicator that I have created, I have come up with. So how to apply it, when to apply it. Guys, it's something we use very heavily in the market insights. So by all means, come on over and check that out. It's always a lot of fun there. Right, and then from there we're looking at about 2080 as our next upside target. So overall, S&P doing well, certainly has a bullish bias. It's not getting anywhere near its 8-period moving average, which is the pink line, but it is riding very nicely along the 5, which is the dot-dashed blue line. It's kind of faint, but you'll see it back in here, but it's riding very nicely along that. So let's go look at the VIX. VIX has pulled back into a great safety zone. We have been here numerous times. Folks, once again, we talk about this very heavily in the insights. 12.5 up to 14.5, we'll call it, about a $2 range. So we're right back into that sweet spot. We're down below the 8-period moving average again. High VIX is high fear. Low VIX is low fear. I call it the fear factor, right? We've got low fear in the market right now, which means low put prices overall in the market. And then I get asked the questions all the time. I get some emails from students, questions when I go and teach the live next step or first step events, and they understand or know a little bit of the system that I utilize. And they hear, Rob, it's great. I see how it works on Google or on Priceline or on Netflix, these higher price stocks. But can you go ahead and show me how this works on the lower price stocks as well? Yes, let me do that right now. So I'm going to back the chart up a little bit so you're not prejudiced and don't get to see the whole result of the trade. And I'm going to back up until my last date on the right side of the chart is the 8th. All right, now we're going to go to Mastercard, which is a fairly low price position. All right, this day the stock closed right where it did, that huge candle up, bullish candle, as we had that huge bearish candle the day before. It was a perfect bearish setup right at a moving average confluence of the 50% line on the Fibonacci. Okay, and my note was we're going to take a bearish trade below X, right? And we did. The next day, the stock opened down 74. We're actually at $73.90, right about $74. $73.90, I believe, is our opening price that day. $73.98. So $73.90 was our entrance into this bearish trade. We bought 10 contracts. We sold on that very same day at 72.25. We sold some of those contracts near the next Fibonacci level. Right? We came down on Mastercard, and no more exits on this day. That was the only exit we took, was that one. The next day, as we move forward, we gap and right down near that 71.70 level. When the stock got down to 71 was our exit, right? That is where we took our next exit on the trade. Now we had a different set of Fibonacci's at that point, right? We've adjusted our Fibonacci since that. right? So right about $71 was our next exit, right at 71. And then we were stopped out of the trade not long after that. The stock moved back down a little bit, came up back to that $71 level, and we were taken out of the trade. So we entered the trade on a very clear signal that I gave in the market insights, right? We entered into the trade and pulled out of the trade based on the target zones that we hit. Now, with that being said, folks, what did that mean to us? Well, for Mastercard, an option that we paid about $4 for, we were up $2,250 by the time our 10 contracts were said and done. Right? So the question you've got to ask yourself is there value in having someone feed some of those targets to you? I know the answer. The answer is yes. So if you say, well, Rob, I can't trade with what you guys do in the market insights because you trade big price stocks. Well, we trade stocks. They're not all big price. We trade the lower priced ones. We trade the Caterpillars. We trade the Mastercards. We trade the Apples. We trade gold. We've probably taken more trades on gold than any other position we've got, and it's awesome as a position, right? But you've got to understand the nuances on how to trade it. We look at this every single week over and over and over again, the same candidates. All right, so with that, ladies and gentlemen, we're done. Have a wonderful day. God bless, and I'll see all of you at the next update. Take care, folks.